Hi, everybody. This is Matt Rinke, the founder of Illumination Wealth. Wanted to give you some quick updates regarding the PPP second draw. We've been getting a lot of questions from our clients and friends just regarding this new PPP issuance that is expected to hit your lenders and banks as soon as this next week. So we wanted to go over some points of clarification as it relates to the PPP second draw program, as they call it. So first and foremost, the length of the program is going to be available through March 31st, 2021. So that means the window of openness for this loan to apply is just over 2 months to obtain this PPP loan. So be on the lookout for it from your lender and be in communication with them now so you can get on the docket and get applied as soon as it's available, because it's only available through this first quarter. Now, as far as the second draw PPP, the loans are really subject to the same rules as the first PPP interim final rules. There are some new nuances to this and points of clarification that we're going to go through today, but in essence, the rules are the same, but there are some additional eligibility restrictions in place, and also some changes to the amounts of the loans, as well as what you can use the loan funds on. So the most important point, I would say, the biggest takeaway from PPP round one to the second draw PPP is eligibility. Now, borrowers need to show a 25% reduction in gross receipts in any one quarter in 2020 compared to that same quarter in 2019. So this means that you need to show that your revenue had a substantial decline in any one quarter. So if you did not have that decline, let's say your revenues are down 23% one quarter and 20% the next and 15% the next, and you had a significant down year, but they weren't down 25% one quarter versus 2019, you are not eligible, unfortunately, for this loan. Now, that's the big thing. So you need to get into your profit and loss statement and compare Q1 2020 versus Q1 2019 and do the same thing to see exactly where your revenue or gross receipts stand compared to 2019. Now, in the recent interim final rules that just came out, they also provided an additional method for showing that 25% decline. And that's really, if you were in existence for all 4 quarters of 2019, is to submit your tax return showing the 25% decline on a year-over-year basis, basically all of 2020 versus all of 2019. That being said, the likelihood of having your tax returns completed by that time to use on your loan application is likely very little. So really looking at your P&Ls is the way to figure this one out. Now, as far as what does gross receipts mean, I think you need to know, because we looked at different people's P&Ls, and let's be frank, a lot of people don't even set their QuickBooks up properly. And so gross receipts include all revenue in whatever form received or accrued in accordance with your company's accounting method from whatever source, including from the sale of products or services, interest or dividends, rents, royalties, fees, or commissions. That's also reduced by returns and allowances. So you need to understand what gross receipts are for your specific entity to compare applicably from quarter versus the prior quarter of the prior year. As far as necessity, this is the big thing that showed up in the original PPP. You have to attest of the need for the PPP loan and certify that in good faith, this request is necessary to support your ongoing operations. Now, let's just say, for example, that you showed a 25% decline in Q2 of 2020, yet Q3 and Q4, you had significant bounce back, and you were up 100% in one quarter and 50% the next, and you ended up breaking even versus the prior year. You're going to have to attest that this PPP loan is necessary for your ongoing operations. So there's a high burden of proof because your lender is not going to be looking at this. They're not going to be seeking to verify your necessity. But you need to know that if you say that it's necessary, that there could be an audit down the road that could go back and look and see that, wow, 2020 ended up being very positive or even more profitable for you. Was that loan actually necessary? So be really, honest about this for yourself when you go to apply. Now, this loan, considering the timing of it, you have to be in operation as of February 15th, 2020 to be able to apply for this loan. So if you have a new business, you have to be in business as of February 15th, 2020 to qualify for PPP round 2. Now, a different change from PPP round 1 to the second draw PPP is that, well, there's loan limitations. One, they're trying to make sure that this loan hits small businesses, that the large public companies and the huge conglomerates are not going to be receiving this loan. So each individual loan is limited to 2 million. This is down from 10 million of the previous PPP. However, businesses that are part of a single corporate group by certain affiliation rules shall receive no more than $4 million of second draw PPP loans. So the limitations are less. You need to have 300 or less eligible employees. And in the application process, they're going to be reaching out and opening the doors to minority borrowers first to make sure that there is fair and equal distribution of this loan and sufficient time is allowed for everybody to get access who is eligible to apply. So as far as payroll costs go, that is how the loan application and the loan amount was calculated on the prior PPP round. And if you can recall, that was 2.5 times your average monthly payroll. Now there's different options to apply on this current round of PPP funding. You have 3 options to choose from: 2019 calendar year, the 2020 calendar year, or the 12 months prior to applying for the loan. Your PPP can be based on any of those 3. Your PPP loan amount can be based on any of those 3. So as far as what you need to submit when you're making this application, so if you're using your 2019 payroll and you're applying to the same lender, then no additional payroll documentation is required because your lender should already have this information on file. But if you're going to be applying in excess of $150,000, you have to provide proof of the revenue decline at the time of application. So you're going to have to show your profit and loss showing that decline. Now, if your loan is less than $150,000, you're not going to have to show that to the lender up front, but it's also going to be part of your application for forgiveness at the time. So that's also important for you to be aware of. Now, if your PPP loan 1 is currently under review by the SBA or information in the SBA's possession indicates that the borrower may have been ineligible for the loan or the amount, you're going to have to wait until the issue is resolved with the SBA prior to being able to be eligible for this new second round PPP second PPP loan, excuse me. You're not disqualified, but you need to have it resolved prior to obtaining it. That's important to know. So another thing to be aware of is that for most industries, you can only get a loan of 2.5 times the payroll costs. However, if you're in a certain sector, you can get a 3.5 times payroll multiplier. This allows for a larger loan based on this industry. So you need to be in the NAICS 72 code, which you can find on your most recent corporate income tax return. Now, this is the accommodation and food service sector. That would allow you to get a larger PPP loan than all other sectors. So they're specifically targeting this group to allow them to get a bigger loan due to the impact that COVID has had on this sector. Now, another change in the PPP world is that the covered expenses has expanded. If you do remember from PPP, 60% of your loan had to be used towards payroll, and then 40% would go to other expenses, such as rent, utilities, mortgage interest, and transportation costs. Well, this current bill expands the definition of those covered expenses to include the following: operation expenditures. This is payment for any business software or cloud computing service that facilitates your business operations, product or service or delivery, the processing, payment, or tracking of payroll expenses, HR, sales and billing functions, or accounting of tracking of supplies, inventory, records, and expenses. So think about this in the sense of your CRM or your EMR or your QuickBooks payroll software. These are all things that are now covered expenses in your PPP, so you can use that for the other 40%. There's also covered property damage costs, meaning that if you were in Minneapolis where there was vandalism and looting during the early part of this year, those public disturbances and all of your repair costs were not covered by insurance or other compensation from the government or other sources, you can use this loan to pay for those expenses. And there's also covered supplier costs, means an expenditure made by an entity to the supplier of goods for the supply of goods that are essential to the operations of the entity at the time of which the expenditure is made or is made pursuant to a contract, order, or purchase order. And it needs to be in effect at the time before the cover period. So Basically, certain supplier costs, especially if you're in the food, perishable goods industry, this expands significantly the use of what your loan expenses can be used for that would then be forgiven. And then it also provides for covered worker protection expenditures. Perhaps you have to install a drive-through at your operations, or you're putting the dividers, and you're getting the plastic and PPE, different equipment to make a safe work environment. And those are also forgivable expenses and covered expenses under the new loan. But it does not include purchasing of tangible residential real property or intangible property. And I think the last big thing, which we've talked about in prior videos, is that this loan is not tax deductible, the tax deductibility of the loan. So your forgiveness is not taxable income, which is fantastic. And the expenses incurred using the PPP second draw funds are deductible expenses. So this is the best of both worlds, meaning you can get forgiveness and the income is not taxable when the loan is forgiven, and the expenses can show up on your tax return. So it's not free money in a sense, but there's no tax impact. They're giving you this money that you can use, and if you get full forgiveness, there's no tax cost to it. So it is fantastic. So these are some of the big things. A lot of the other stipulations remain the same. It's still a 60-40. 60% of your loan needs to go to payroll costs. 40% needs to go to those other covered expenses, which have expanded definition. You're still going to need to maintain. There's still going to be headcount issues and implications with respect to this loan, similar to PPP second draw, to determine whether you get full forgiveness. But those are some of the points of clarification. Now, what are your marching orders from here? It's to, one, get in touch with your lender, whether you're using your current lender or you're going to be using a new lender. Be aware, be in touch with them so you know when you can apply. Make sure that your P&L is in place and that you actually do qualify. Make sure that you feel like you are, this is necessity for your business on an ongoing basis, and start to pull together your payroll records to determine whether 2019 or 2020 is a better average monthly payroll for your loan. Because you might want to think about, knowing the simplicity in which forgiveness is allowed for less than $150,000 loans. If you get a loan of about $155,000, you might not want all $155,000. You might want a smaller loan amount because there's additional complexity in terms of forgiveness, as well as even the loan application. You're going to have to prove the revenue decline at inception. So, there's things to think about as it relates to applying for the second draw loan. So if you have any questions regarding your PPP second draw, how to improve your business, and put it in its best financial position, don't hesitate to reach out. I'm happy to share more resources with you. You can reach me at matt@illuminationwealth.com, and I look forward to being of service and of value in the future. So continued health, safety, and continued prosperity in 2021. Take care.